If you're a new business owner or if this is your first time applying for a business loan, you're in uncharted territory. When you apply for a business loan, you're providing the lender with your personal and business information, and a lot of money can potentially change hands. So, how do you know who you can trust? Business loan scams can get the best of even the savviest small business owner, but not if you know the red flags to look out for. I'm Priyanka Prakash, Senior Staff Writer and Small Business Expert at Fundera, and today I'm going to cover 8 common warning signs of business loan scams. Learn how to spot these so you can avoid becoming a victim. Warning sign number 1: you're asked for upfront fees. A good lender or broker should never ask you for fees before they've placed you into a loan product. It's true that lenders and brokers run for-profit businesses and they need to make money, but first they need to do their job. You should expect to pay fees only after a loan closes. The exception here is for work that's completed during the initial stages of a business loan application. For example, you might have to pay a credit check fee at the beginning of a loan process in order for a lender to evaluate your eligibility. And banks also sometimes charge initial application or processing fees, but steer clear of any untested online lenders who ask you for fees in advance. Warning sign number 2: you're promised a loan. Another red flag is a lender who promises or guarantees you funding. No lender or broker can guarantee that you'll receive funding until the underwriting stage is over and you've received an official loan offer. It's possible that the company making these claims might just want your business's financial information or your personal information to sell to a third party, so they push you into filling out an application. Especially if you have bad credit, it's easy to fall for a promise or guarantee of funding, but you should be on even higher alert in these cases. Many lenders prey on business owners with thin credit files or low credit history, banking on the fact that they really need the money. If you have bad credit, your best bet is to improve your credit before you apply or to stick with reputable online lenders. Warning sign number 3: the lender has no website or business email. There's really no good excuse nowadays for a business to not have a website, and this includes lending and brokerage businesses. Anyone who you're working with to get funding for your company should have a transparent online presence. Ideally, the website should include a summary of their loan products, their interest rates, and fees, but at the very least, they should have a business address and contact phone number listed on their website. Before filling out any kind of online application, especially one that contains sensitive data, it's a good idea to try calling the company and see if they actually have a working phone number. They should also have a business email address, not a personal email ending in @gmail.com or @yahoo.com. Having a website or business email unfortunately does not guarantee that you're not being scammed, but it does give you some added reassurance that you're working with a reputable lender. Warning sign number 4: non-traditional advertising. Did you get a Facebook message or an email from a lender pre-approving you for $100,000 in funding? Well, stop right there, because lenders and brokers typically don't use such advertising tactics. You're much more likely to see an online ad or hear about a lender by word of mouth. When you do see an ad for a lender, check if the ad links to their website or landing page and then proceed from there. Warning sign number 5: unsolicited contact. As we mentioned before, business lenders and brokers typically either advertise online, by word of mouth, and occasionally by direct mail. If you receive a cold call or cold email out of the blue with details of a loan offer, resist the urge to give them any personal or financial information. The best lenders out there don't need to rely on these tactics to get customers. Warning sign number 6: high pressure sales tactics. Borrowing money for your business is one of the most important things you'll do in your journey as an entrepreneur. So you should have the opportunity to compare your options carefully and not be pressured into making a decision that could cost you hundreds or thousands of dollars in interest and fees. That's why it's important to take a step back if a broker or a sales rep at a lender is overly pushy. Now, it's true that loan rates can fluctuate with the market, and a good lender will want to inform you about impending rate changes or fee changes. However, if you regularly hear a lender saying that an offer is only good for a limited time or that it's your only chance to act on an offer, better to go with someone else. Scammers bank on the fact that you'll feel rushed and make a poor decision. Warning sign number 7. Related services are offered for free. Sometimes lenders offer services designed to help you qualify for a loan product. For example, a lender might offer to help with business plan writing or sell credit repair services. That's not necessarily a bad thing, but you should be wary if these services are offered for free. That could just be a lure to get you to provide proprietary or personal information. Before going ahead, at least see if you can read customer testimonials about the lender's value-added services. Although customer reviews can be faked, you'll feel more reassured going ahead with the lender. Warning sign number 8. Loan terms are too good to be true. If you have a credit score of 500 but a lender offers you an 8% interest rate, you're probably about to walk right into a scam. Interest rates and fees on loans typically have an inverse relationship with credit history. The better your credit history is, the lower your rates and fees are likely to be. So if a loan offer seems just too good to be true, that's because it probably is. And those are 8 red flags of business loan scams that you should be on the lookout for when applying for funding. Hopefully these tips will make your business loan experience a positive one. The advantage of working with a marketplace like Fundera is that the lenders on the network are pre-vetted, so you know you can trust them. A loan specialist will walk you through all the different options tailored just for your business based on factors like credit score, time in business, and business revenue. To learn more about different business lenders and the process of applying for a business loan, go to fundera.com/blog and subscribe to our YouTube channel for more videos. Thank you for watching.